Good evening. Good evening, everyone, and welcome to our webinar for tonight, where we will discuss about, candlesticks. Just the usual candlesticks, but some very powerful ones because, you know, every time we trade, we look at these candlesticks and there's a meaning behind them, why they appear on the chart. And with that, we can capitalize on the next move. All right. So for the main content, introduction, basics of a candlestick, bullish kinds of bullish candlestick patterns, bearish candlestick patterns, continuation patterns, and the psychology behind these patterns, and the strategy, and lastly, the conclusion. All right. So let's begin. So, as usual, we have the 50% deposit bonus where you will have $50 for 100, 250 for 500, and $500 extra if you will deposit 1,000. So, avail of this opportunity and, you know, you can also spread the word to your friends and family who are interested in trading and contact our algorithm managers where they're always there to assist you anytime, anywhere. All right. So hope you will reconsider this giveaway. All right. So introduction. So candlestick charts show trader psychology. Yes, because when it's green, you need to buy. When you see red, you need to sell. Simple as that. And, they also reflect the buying and the selling pressure of the trend. So the more green candles means this is a bullish trend, more red candles, it's a bearish trend. All right. So understanding candlestick psychology helps identify reversals, continuation, and its market sentiment. All right. Very easy. Very easy. So the basics of a candlestick is like, there's a body like this for the bullish one and the bearish one. So body represents the open and close of the prices. So for a bullish candle, it price opens here, goes down as it's low, but goes back and make this body all the way up there and hitting this high, but retraces closing at this price and reversal on the bearish candle. So it opens there, goes high, but goes back down and filling, making all this body of the candle here, and then closes at this point. So that's how a candlestick forms, which we already discussed many times. And the wick or the shadows, okay, represents the high and the low of the prices. So for the bullish, looks like that, and the bearish looks like this. So it can go, some wicks are very long and some are short. Some candles don't even have wicks sometimes, but most probably and most of the time you will see such wicks every time in the candle. So bullish candle close is greater than the open, while the bearish candle is lesser than the open. All right. And for bullish candlestick patterns, okay, these are the most common pattern traders tend to tend to wait and see on the chart every time. So a hammer, this is very this is a very powerful signal. When you see this one, it looks like this. Okay, it could be red or the green. Okay, so by the look of the candle, it looks like a hammer. That's why it's called a hammer. Okay, there's the handle and there's a very short body forming a hammer. Okay, it signals possible reversal at the bottom. Okay, so in a trending bearish market, okay, by the end of the trend, a hammer will appear at the end of the trend, signaling a reversal. Okay, so in also one of my favorite for the bullish engulfing, it is a very strong reversal signal. So this candle completely engulfs that red candle on its left side. Okay, longer green candle fully covers the previous smaller red candle, indicating a potential reversal from a downtrend to an uptrend. And when we see this kind of pattern, okay, we place our long positions after that and just ride the trend on that reversal. Very easy, right? And lastly here for bullish candlestick pattern example is our morning star. Hello, Sir Nani. Welcome to the webinar for tonight. Hope everything is well with you and hope you will, just catch up with our webinar because, we're just discussing the candlestick psychology. Okay. Because as you know, we always look at the charts and use the candlesticks most of the time. So, uh, last example here for the morning star, it looks like this. Okay, it indicates shift from bearish to bullish. So when you see this kind of pattern, there's one red candle there and a very small one. Okay, it means this is a reversal because after the third candle forms, it's the candle typically is bigger than the previous one. So it will look like this, huh? So very easy. That's called a morning star. So for the bearish one, for the bearish candlestick pattern, okay, there's the shooting star. Okay, it signals potential reversal at the top. So if it's a bullish trend and you see a shooting star pattern like this, it could be a red or a green candle. Okay, it signifies a reversal to the downside because price was going up there and then sellers overcomes the buyers closing on that price. So there's a pressure now, a selling pressure from the buyers. Sorry, from the sellers. So it's called a shooting star. Bearish engulfing, also strong downside reversal. That's our favorite or my favorite. When you see this pattern, a bearish engulfing signifies a trend to the downside. And as you all know, you already know the bearish engulfing candle. So that's how it looks like. It engulfs the green candle on the left. Okay. And lastly, the evening star indicates shift from bullish to bearish. Okay, so uh, there's a green candle there and a small red candle forms after that, but suddenly there's a bearish candle also forming here. Okay, it's quite significant than the previous one, which gives us this evening star. All right, hope that's clear. Now, What happened to our slide? How can we erase this? This day? I don't know how to erase this, my friends. Maybe some eraser here. This one, maybe, yes. Okay, very good. Let's erase that. Okay, now, so if we already discussed the bullish pattern and the bearish pattern. Now, there is also a thing called continuation patterns. Okay, so a doji. Okay, market indecision, possible trend continuation. So it's just like this. Okay, a doji, as you all know, it looks like that. Okay, looks like that. Very small body and wicks on top and the bottom. So it could be like this. Some wicks are longer, and this is everywhere on the chart, right? And we have that Haikenashi candles where we only wait for the doji to appear, signaling a reversal of the trend. And from there, we can catch this next trend to the upside or to the downside. So a doji, yeah, very powerful pattern. Spinning top indicates pause before the trend resumes. So it's like a doji, but but quite there's quite a body, okay, compared to the doji. The spinning top, okay, by the word top because it's like a spinning top like that, where this will be the nail of that top, and it looks like that. Very easy to spot, right? So this indicates pause, means yes, there's a pause in the price action. Price is just going nowhere. Okay, it's usually on that same price level. While the next one, we have the three white soldiers. Okay, strong bullish continuation. When you see this kind of pattern, three bullish candles, it doesn't matter. Sometimes there's a small candle in the middle, and sometimes there's two candles, succeeding candles after that. This is all called three white soldiers. That means it's still a bullish trend, strong bullish continuation. Okay, and three black crows for the bearish trend. We will see this kind of these three bearish candles forming in succession. Okay, very easy to spot. Now, okay. So the psychology behind these patterns, because bullish patterns, buyers overpower the sellers. Okay, when you see such a pattern here, where is that? Bullish, this one. This signals that the buyers are overpowering the sellers. Okay, very easy. While the bearish candlestick patterns, okay, sellers overpower the buyers. Very easy. That's all there is to it. That's all the psychology I can explain. Indecision candles, market uncertainty. Yes. Wait for confirmation. Means prices just going nowhere here. See? Okay. And for the context, look at trend and support resistance levels. That's it. So when it's going up, then buy. When it's going down, then sell. Very easy. Now, applying the candlestick psychology, okay? Always trade with confirmation. So, what are the confirmations? Those patterns, okay? The bullish engulfing, okay? The bearish engulfing, the bearish engulfing, the bullish engulfing. That's all there is to it. Because when I see this one, this is my favorite entry confirmation. I will enter there. Or a hammer. You see, you have to uh like practice, okay? Practice spotting these patterns in the chart because this will give you more confluence, more confirmation that your trade is going, in that right direction. And lastly, what is that? Look, okay, for support and resistance levels, where I will show you later in the chart, how you will be able to apply all this, okay? And always sorry. Yes, you can always combine candlestick with the support resistance. Use with trend indicators like RSI or moving averages. You could also use that. And manage the risk with stop losses because this will uh, enable you to uh, stay longer in the trading game. Okay, so not to lose much of your capital. So the conclusion, candlestick psychology reveals its market sentiment. Okay, when you see those kind of candlestick patterns, means it's either going to the upside or to the downside. So key to spotting reversals and continuations. Yes, spotting the reversals. This is very important because we want to be there at the reversal point where the trend will reverse, right? And to catch them and have more pips along the way. That's it. That's all the reason behind that. Okay? And combined with other tools for high accuracy, okay? Such as your such as your trend lines. You can always use that. And that's where you will know that the trend is reversing. And practice is essential for mastery. Yes, if you will keep practicing this, applying this in your trading journey, then the more you will be able to get the hang of this. Okay? So, Algotur is a quantitatively driven trading company focusing on market making and multi asset trading. Its expertise spans various asset classes, including futures, options, stocks, commodities, forex, and cryptocurrencies. Algotur is a quantitative trading service company with over 10 years of experience in strategy development, focusing on proprietary trading. Okay, so let the numbers talk. Yeah, there's a lot of information in the Algotur website where you can read all this uh, amazing company. All right. And we also have copy trading where you can automatically replicate the trades of expert traders in real time. When they buy, sell, your account does too without manual effort. So start with only $100 and start capitalizing with this, where you will also use Zoe for this to place your trades. As the next slide, we have insurance program where if you end at a net loss, Algotur will reimburse your qualifying losses. Keep 100% of any profits you make. Originally, this was $1,500 to subscribe, but now for only $500, you can avail this. Okay. There's a sweet spot here, $6,000, where the return of investment will be 26.79%, as high as that. And some many more benefits like daily 2 to 5 signals, okay, up to $1,000 in daily loss coverage, insurance, 24/7 track support, and much, much more. So if you want to avail this, okay, you can always contact our Algotur managers where they will be gladly to assist you anytime. Okay, my friends? And Zoe, where we will always place our trades in our mobile devices. It's available on Google Play and App Store. And Zoe is a global financial technology company under the Zoe Group, headquartered in the United Kingdom with operational centers in Hong Kong, and the United States. Specializing in CFD trading, Zoe offers a diverse range of financial products, including Forex, precious metals, oil, indices, and US shares. Zoe is a fully regulated, offering a secure professional trading experience with competitive fees, fast execution, and powerful tools to grow your investments confidently. Okay, my friends. So install this in your mobile devices and start trading with it. Okay, so lastly, okay, our 50% deposit bonus. Just deposit 100 and you will get $50 extra, 500, 250, 1,000, you will get $500 extra. So avail as much as you can and spread the word to your friends and family interested in trading where they can benefit from this giveaway. Okay, my friends, and that's the end of the slide. And now we will go to our chart and see this in action. Okay. So we are in gold, XAU USD, typical price action in gold there. So, so how do we do this? Okay. Because since you are looking at the chart every time, right? Why not spot these candlestick formations or candlestick patterns? Okay. You will spot the what? This one, the hammer, the bullish engulfing, which you all know now very well. The morning star, if it's possible to spot this, this will also act as a reversal point. And for the bearish candlestick patterns, we have the shooting star, the bearish engulfing, and the evening star for bearish. Okay, so just spot all this, and you can have some edge, more edge in your trading. All right, the doji, the spinning top, three white soldiers, very easy, or three black cross for the strong bearish continuation. Okay, now we will check the chart now and see the price action. So let's play this. Okay, so what are we seeing here? You see, if you're just looking at the chart, staring at it the whole day, then this is very good for you. Okay. Welcome to our webinar, Miss Ida. Hope you can have some, some engagement here. If you have any questions, please do so. No problem, and we will try our best to answer your questions. Okay. So typical price action here. You see candles forming everywhere. So what do you observe now? You need the key level every time, okay? So if you can see here, all this is not going down. Why? There is a strong support here. This is now acting as a key level. So you mark that, okay? You can also check the left side. You see all this, it's not good. There's like a big space here. So this will act as a key level, okay? And now it is acting like one now. You see? When price goes in this level, the candles are just bouncing here, just like this. Okay. Yes, there was a time price went down, but eventually now it's acting the same way as this. Okay, so this is now a good key level, right? So now just spot those candlestick formations like the hammer, the bullish engulfing, okay, in the chart. So what do you see? Okay, we are now in this area. What do you see, my friend? Isn't that a bullish engulfing? Isn't that a bullish engulfing, my friend? And also, that is a hammer. Can you notice that? A hammer, green or red? That is a hammer. Okay. Plus this bullish engulfing, it's now giving you two confirmations to buy. Long positions. Okay. Just below this key level here or this yeah, this swing low here from that wick, and target 1 is to 2. How do you know it is 1 is to 2? You see this risk reward ratio, this is already in the 1 is to, this is 1 and this is 2. Okay, you lose $1, you gain $2 here. Okay, just an example. This could be $100, this could be $200. Okay, so that is 1 is to 2. It all depends on you. You want it to be exact like this. 2, that's it. And just target this. Playing now. Okay, price is going. Will it hit your TP? Yes, easily. Easily, my friends. You see, 1 is to 2. Now you have $200. Risking your $100, you will have $200 here as your profit. Now, what else do you notice? Isn't this a three white soldiers? Where is that? Three white soldiers, strong bullish continuation. Continuations, huh? Okay. So isn't this a bullish trend? It's a bullish trend. So this is a continuation. When you spot this three white soldiers at this point in time, even yes, you are profiting, but you didn't reach your TP yet, but you are still profiting now. Enter another position. Enter another position just below stop loss, just below this candle. Okay, stop loss just below this last candle there, and target 1 is to 2 again. Doesn't matter 2.9, 2.10, it doesn't matter. This is already 1 is to 2 risk reward ratio. So when price will hit this entry price, it will trigger your trade. So let's play that. Will it hit your TP at this point? Yes, easily. You see, there's a wick. There's a wick there. It means this is a trend. I mean, your trade is already finished. Now you have 2 wins already at this point in time. Okay. Now, what else do you need? Okay, open your stochastic and your MACD. Okay, if you will notice, if you entered here, it's already made the crossover. The stochastic already crossed over there. And from this point, the MACD is giving you these pinkish bars here instead of red, means the sellers are losing momentum here until it crossed over here at this point in time, and you are already in the trade profiting. Okay. And from this point, you place another trader with this the three white soldiers pattern there. You place trade again, the second trade there, where MACD has fully crossed over again here. So the more bullish confirmation. So that's why your trades are just going in the proper and right direction, right? Easy. Hello, Miss Ida. Welcome to the webinar for tonight. Thank you for joining. And iPhone. Hello, sir, ma'am, iPhone. Who are you? I don't know your name, but welcome. Thank you for attending tonight. So that's it, my friend. So after that, you already have 2 win trades. Just let the price action go and watch. Hello, Ma'am Nora. Welcome to our webinar for tonight. Thank you for joining. You see, you already hit your TP. You see, wait, just wait. Now your price is going down, and just see some structures. What's happening? So you need structure. Some key level. Okay, where are your key levels at this point in time? Can anyone answer? Can anyone answer? Where is our key level at this point in time? You see, my friends, it's very easy. Yeah? Always key level. Key level is the key most of the time. Huh? Okay, let's spot this key level. You see this? This is resistance. Why the candles are not going there and then just drop like that? So there's a resistance at this point in time here. Mark that resistance and drag it to the right. Okay? Sorry. Just like this. Okay? Okay, it means price cannot go at this point in time. Okay? And then suddenly it broke there. And then what happens? Price went down again, retested this, and then it broke again. So now this is now becoming support. This is now the support. This will be a key level where we can capitalize in the future. Maybe here somewhere there in the future it will go down and hit this key level. Then we will buy there again. But for now, let's see where price will take us. Okay. So what do you notice here at this price action? What pattern do you see? Can anyone answer me? What pattern do you see here? What pattern do you see here, my friends? What pattern? Anyone? Can anyone answer me? Okay, this is the three white soldiers, right? There's the three green candles, but this is also three green candles, right? Yes, three white soldiers again. Enter from there. Okay, and let's see what happens. You see, MACD has crossed over there, and stochastic is on top, means it's bullish sentiment. Okay, so once you have that, target 1:2 again. 1:2 there. This is 2 ratio. This is 1, this is 2. Your stop loss is always less than your profit. So 1:2. Play this out. Ah, it hit our stop loss. Did you notice that? You see, this dotted line means it stopped here. There's a wick. You see that wick? Yes, it hit our stop loss. So at this kind of scenario, okay, you have to place your stop loss well. Okay, you see, yes, we place it just below this one. Okay, but this is a wick here. Okay, it means this is the lowest it went from that point on. So just put it below this wick. That's the proper way. I didn't put the stop loss well, but calculator, is this 50 pips? Okay, what is this? 3410, 3410, 3404. That's 60 pips. 60 pips. See, what is our ideal stop loss? For me is 50. So 340, if that is 10, 3405 there. 340565. Okay, that's it. That is your 50 pips. You see, it didn't this will not hit our stop loss. So if we will replay this again, okay, that's it. You place your trade there after this three white soldiers here. For all our latecomers, okay, three white soldiers, it means like this: three white soldiers, strong bullish continuation. You see, like that. Three green candles in succession means three white soldiers. So continuation. So we were already in an uptrend. You see, it's going uptrend, up, okay. So this is continuation. So 1 is to 2 playing now. So it will not hit your stop loss because we placed our 50 pip stop loss well now. Now just wait to hit that take profit. Oh, it hit again. So this trade didn't play well. Yeah, this is trading, you cannot win 100% every time. Now we have one loss, two wins, one loss. Let's continue. Okay, what do we notice now? More green candles. So this is really some bullish trend, huh? Okay. So again, key level. This is acting as a resistance. Okay, this is a resistance as well. Yes, resistance, and now this becomes support. So we should have entered here, huh? We should have entered here, not from here. We should have waited, and then there's this doji, right? It's a doji candle, and then a green candle. So this is now the bullish engulfing. That should have been our entry like that. So yeah, you cannot predict the future. You just seeing these trends or patterns and just placing it as so. So that's why uh, key level. So this is acting as a resistance here. And when it hit back this price, went back to this key level, it's acting as a support, giving us this doji and now a bullish engulfing long position. Okay, just below this bullish engulfing there. Target 1 is to 2 again. So 2.42. It all depends on you now. Or this is still 1 is to 2. Who knows? 1 is to 3, but 1 is to 2 is the ideal, until you master this one. And if you want to be more profit, just make it 1 is to 3. Now it's 3.09. Okay. If you will look at the left, because we are in the 5 minutes, okay, we cannot see it. It's very far. So just go to 1 hour. Okay, there's your 1 hour. Okay. What you will target? The price is already here. You see this line? So the current price is there. So where is your profit? You want to go up. So just look to the left. You see? Target some high here. This swing high here. Okay. Or maybe here. Who knows? What is this? 3428. Let's try that. 3428. Will it reach 3428? That is 3, 4, 2, 21, 23, 24, 25, 26, 27, 28. Okay. Will it hit this? Will it hit this take profit? Who knows, my man? Anything can go in trading. But let's see. If it's all giving you this bullish patterns there, okay? Let's see our stochastic. Where is it now? Okay, it made a crossover. Okay, MACD is showing some weakness here. Now instead of red, it's giving these pink bars, but still there is no crossover. But that is one thing you have to take into account if you want to enter at this point in time, this early, or wait for more confirmation. Because you see, if you will not uh, try it yourself, you will never know. You will never know. Maybe we don't need MACD at this point in time because stochastic already crossed, made a crossover, and what else? It gave us this bullish engulfing. So all we have to do now is wait to see if our trade idea will be successful. So let's play this. Okay, everything set. Okay, stochastic. And then now MACD is made this crossover. Okay, very nice. Now we are really in a bullish trend. Hopefully, it will hit our take profit. And just be patient. And just be patient, my friends. That's all you have to do. Okay? So it's going there slowly but surely to your take profit. Okay, let's speed things a bit. It's like times three. Hit the take profit. No, it will hit our stop loss. Oh, no, 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 no. Go up. Okay, our trade is still alive. Let's just see. So it hit eventually, yeah? It hit your stop loss eventually. Okay, that's the job of the stop loss. So there's more trades to go, okay? Because sometimes it's like that. So what you can do at this kind of scenario, okay? Okay, from this point, what is this? 3407 or 3408 to 34, what is this? 3422. You see, that's already like 120 pips. Okay? At 120 pips, you can move your stop loss to break even at this time. Yeah. When it passed like 50 pips going up, okay, you put it there. So you will never have a size. So when it hits this point, okay, at this point it hit it. So it's break even. You didn't lose even one or 10 cents. Okay, you are in a break even. Okay, or you can also move this stop loss just like this. Okay, little by little until you reach 100 pips at this point in time. Maybe let's say this is 100 pips going up there. Okay. So when price will hit your stop loss at 100 pips, you have your 100 pips. Okay. It hit your stop loss at this point in time. There, at this point in time. I hope you get the idea, huh? So that's it. That's how these candlestick patterns will be able to give you some some more edge in trading, huh? But always stop loss, okay? As per our slide here, where is that? Uh, where is that? Okay, manage risk with stop losses. Always with stop loss. Okay, don't forget that. So let's play some more. Maybe we can catch some more of this some trades here. Okay, what do you notice now? What do you notice now, my friends? Key level, resistance. Okay, there. You see, price wants to go up, but no, there's something here preventing this. This is resistance. How many touches? One, two, three. Okay, finally on the fourth try, it broke this, right? That is very good. It means what? This will be a key level in the future. So it broke now. This will be now becomes a support. So from this, we will have to find some pattern again at this point in time. Okay, so playing now. Okay, that's it. What did it give you? Bullish engulfing. MACD is on a crossover, okay, and going strong at this sentiment here. Okay, okay, long position again. Stop loss just below this bullish engulfing. Target your 1 is to 2. 1 is to 2. There, 2.08. Doesn't matter. This is 1, this is 2. And just target that. Play. You see? Easily. Easily hit your take profit, my friend. So more. That's it. Now you just have to wait and find some key level like this. Okay, resistance becomes support, giving you this bullish engulfing. It retested this for the last time. Exactly at this point, this is the best entry. Bullish engulfing on the retest of that key level and enter from there. You see, stop loss just below that bullish engulfing, and 1 is to 2. Who knows? 1 is to 3. This is 1 is to 3. There, you can hit 1 is to 3 also. You just have to push the envelope, as they call it. Okay, be more risk. Okay, because okay, from that point on, you will put your stop loss and break even. Now you will not lose even 10 cents. Okay, and then from there you will hit your take profit. So that's done. Who knows? Let's see, maybe some bearish action, some sales now maybe. Let's see, my friends. So what is our bearish patterns? There, bearish candlestick pattern. Shooting star, if you see this one, this means a reversal. A bearish engulfing to the downside, okay? And some evening star. Okay, let's try to spot some of this in this point. See, this is what is this, my friend? What do you call this? Is this not a shooting star? Okay, long wick, small body, long wick. See this one? Long wick, small body. Okay, that's a shooting star, my friend. You can enter from there, and then this is a bearish engulfing, right? Let's try this, huh? Who knows? This could play out well. Okay, you have your shooting star, you have your bearish engulfing, sell positions. Stop loss, just above that shooting star there. And what? Target this key level. That's it. 1 is to 6. You see, 1 is to 6. Wow. 1 is to 6. Let's play this out, huh? And what do you notice? At this point in time, here, you see, crossover of the MACD, stochastic going down also. Let's play this. It hit it. It hit the stop loss. Okay, at this point, okay, either you stick with this one strictly, yeah, if you wanted to stick with just, it depends on the size of the candle, okay? But let's measure this. Is this 50 pips from this point, 3444 to 3449? Okay, 4, 5, 6, 7, 8. Exactly 50 pips. Okay. I already put it maximum at my 50 pips. Okay, 444 to 449 is 50 pips, right? So that's it. It means this trade is not for us because you stick with your strategy. 50 pips, that's it. Okay, this is my maximum I can tolerate. So with this one, you move to the next trade. Okay, on to the next. On to the next. Okay. Now you see some bearish engulfing here. See, this is a bearish engulfing. But check where is the MACD and the stochastic at this time. See, MACD is going up. Okay, so we cannot sell. We need more information like this, huh? So you cannot take this trade. Okay, my friends? So some more. So you see, it's going up. Finally, some strong red candles here means something is about to happen now, like strong. Okay, what do you see? This is a doji. Okay, this indecision. Either buyers or sellers are fighting for the price here. But we need only those things. Okay, the hammer, the shooting star, the engulfing candles. So let's check more. Okay, what is this? This is a shooting star, right? Could be, yeah, like this. Okay, this is a bearish, bearish candlestick pattern. Okay, if you will enter here, okay, stochastic is now pointing down. Okay, it made a crossover. Yes, MACD is about to, but you see, it's not really made this crossover yet. So this is risky. Okay, you cannot enter like that. Plus, you get your key level again. This is resistance. Okay, resistance. It's in the resistance. Yes, it should go down, but let's see some more of the candles. Okay, it's going there. Okay, the more now MACD is now giving you this about to cross over. Maybe this is the time to enter, huh? Okay. Now, what is this? Three red candles. What does that mean? There, three black crows now. Strong bearish continuation. Let's see, huh? Let's enter from this short position. Your stochastic has crossed over. MACD has crossed over. Three black crow. Yeah, is it three black crows? Yeah, three black crows. Stop loss 50 pips. What is this? 3446 to 3551. Yes, exactly 50 pips above that. Target the what? Target this key level here. Which this will give you 1:7 reward. Huh? Let's see, my friends. Ah, it hit it. It hit it. So those are the odds, huh? Okay. In trading, you cannot say, see, if I if I really want to only show you some winning trades every time, it means I need to memorize all this price action from this point to this point, which I cannot. So that is the odds. So that is not that is not a trade to go. Okay, that is not the trade for us. So we need to see. I just want to show you some bearish example. Okay. Okay. Let's play this out. Okay, price is going. Okay, what do we see? Doji, yes. Three black crows again. If you entered here, let's try that. Okay, MACD crossover, short position, 50 pips. Let's say this is 50 pips, 70 to 77 to 85. No, this should be 82. 82. Yeah, that's the 50 pips. And target this key level here. Just like that. Okay, let's see. Huh? Hope it will hit our take profit this time and not the stop loss. Whoa, very scary, huh? Oh my God, let's go. Hit the hit that take profit. Hit the take profit, not the stop loss. It hit the stop loss again. So those are the odds, my friend. Okay, trading is trading. Always manage your risk like that. You see, that's why I told you. I say I'm just showing you like this. But if I will just always keep showing you the winning trade, you see, up with this one, manage your risk. Once you are winning at this point in time, who knows? Put your stop loss at break even, close it like that. When it went back to down, you will not lose any money, and just move on to the next price action. That's it. So I hope you get the idea now, and I hope I've shown you some new, you know, some new things about trading because these candlestick patterns, okay, especially this. Where's our winning trades here? Okay, this bullish engulfing patterns here, like this. Okay, this is okay a doji plus this bullish engulfing, which we were able to catch, and this bullish engulfing, this hammer plus this bullish engulfing, and plus this crossover of the MACD and the stochastic. So it will give you this kind of winning trades, right? That's it. And when you get some losing trades, okay, like it, then so be it. Okay, that's why just move your stop loss like this, okay, to break even without this. Let's see, when you're winning, when the price went down, then just move this. Okay, and then you will win. When it went back to this break even, now you will not lose any money. Okay, my friends, always manage your risk like that, and hope I've given you some another another tool where you can capitalize on your trading journey. Okay, thanks again for all of you who attended tonight's webinar, and hope to see you by next Thursday to have some more of these strategies where we can discuss different types of strategies again and capitalize on our training. So until we meet again, my friends, thank you and good night. Bye bye.